In this video, I'm going to share numbers that the Bank of England revealed on possible impact of climate change on stock market performance. If you find these numbers as eye-opening as I have found them, feel free to share that opinion in the comment section below. So guys, the impact of climate change will be and is being felt by every single one of us. Just think about what has happened so far this year with the heat waves in the US and the extreme flooding in UK and Europe. But here's the thing, I am not only just talking about increase in heat waves, rainfalls, or flooding. Climate change is going to change the way we live our lives, whether we do something about it or not. Governments and independent central banks are responding to it. Most recently in the UK, the Bank of England started a stress testing scenario on climate change to see how our financial system can cope with it. Modeling climate change risk is a completely new concept, and companies all around the world are trying to figure this out altogether. And so far, the impact is not looking good, especially in a world where we do nothing to tackle climate change. Let's roll back to the problem at hand. I don't know if it's gonna shock you, but greenhouse gases aren't really the villain here. It is only a natural process of keeping our Earth warm as the nature intended. Without this effect, Earth will be too cold for us to survive. So the problem is not really the greenhouse gases, but us.
Human beings have overrun the world.
And it began since the Industrial Revolution. It started from Britain in the 18th century before it spread to the rest of the world. The Brits were enjoying their booming cotton and trade industries and started to allow investors to support the construction of factories. So uses of oil, coal, non-renewable energy, you name it. It was all being used without limits, all for the sake of profit maximizing, but also of course to further the human civilization. It was all well and good, except ever since then it kind of gone out of control. Human activities and our ways of life, whether it's the car we drive or the meat we consume, all these choices are leading to drastic increases in carbon emissions to an unprecedented level. And if you look at this chart here, you can see just how well correlated emissions are to temperature. So the problem is, if we do not bring emissions under control, in order to limit the temperature rising, the Earth will experience radical shifts in its climate. According to the latest research, we need to reach net zero carbon emissions by 2050 to limit temperature rising above 2 degrees. That was basically the whole purpose of the Paris Agreement. This agreement legally binds countries to make it happen. Now, you must be thinking, what has all of this got to do with the stock market? Well, hold that thought. This will really make you appreciate just how interconnected everything is. So far, we have all established that in order to control our climate from going all emotional is to control the level of emissions. This is something almost the whole world and its government agrees with. I mean, even China agrees with it, and they are the world's worst polluters. China is responsible for 30% of global emissions, but thank God they also are committed to net zero at least by 2060. So all this stuff is very serious, even for the Communist Party. Anyway, the point is, this is a joint effort by the whole entire world, something that the US and the China agrees to work with, keeping aside their strategic and ideological differences. And what this means is that across the whole world, we're going to see a lot of policies and actions being taken by governments in order to tackle climate change, and different countries and governments will be taking different paths to achieving this. I mean, it already started. Just think about the road taxes that we have to give when you go into central London, or the popularity of EV vehicle and a ban on diesel. On a standalone basis, they may seem trivial, but over time, when you add up all these different changes that are happening in the world, these are our current policies that the governments are taking in order to tackle climate change. Now, the reality is the destination to net zero 2050 may be final, but the path that we take to get there is not. And there are scientific organizations out there who are literally right now figuring out different paths that we can take to get to net zero 2050 and how those paths are going to impact things like stock market return. Out of various different paths, today I will share with you the 3 main paths that the Bank of England have chosen to stress test the impact of climate change on the UK's financial market. Trying to reach net zero by 2050 or not means there are two main types of risks that we should all be aware of. Firstly are the government policies, increases in taxes, and anything that leads to emissions being reduced. These are your transition risk. Second risk is the actual physical damage that may come from climate change. For example, increased flood risk to your home or shop. This is not uncommon. So taking into considerations these two different types of risk, we will look at what will happen to the stock market under three separate pathways. Number one, what if we are all grown up and follow an orderly pathway to reaching net zero by 2050? What will be the impact of this? Second, what if we are just a little too lazy and don't get enough done until 2030 and then suddenly get hit by reality and start to make a lot of policy changes very quickly? And finally, what if we're just way too lazy and not just bothered to take any action? So we wait and see what unfolds. So what can we expect to see under all three different scenarios, and how are they going to impact our investments and money? So in the first scenario, the government has to spend a lot of money and incentivize us as well as the companies to reduce emissions. We can expect investment in better infrastructure and houses by the government. This may be one of the reasons behind why certain sectors or clean energy investments are likely to do well. Because under this scenario, we are expected to have 100% EV cars by 2045. But here's the catch. Governments will have to meet this growing expenditure by increasing taxes. Most of it will come from strict carbon tax, which means companies will have to either pay a tax for emitting carbon or trade them with other companies. This is a cost to businesses, so companies' profitability will fall, which will ultimately impact their stock market prices. And in the second scenario, the expectation is that it will lead to the worst type of impact on stock market and our finances. And that's because it comes with a lot of volatility and uncertainty. And one thing that is for sure is that the stock market absolutely hates any sort of uncertainty. And according to the scenario, the sudden change means that the companies won't get enough time to make all the right adjustments to their businesses. This will lead to panic and increased cost. The Bank of England expects this pathway to lead to a sudden recession in the UK. So expect to see the worst equity market performance. And finally, if we don't take any actions at all, then of course there won't be any transition risk, so there won't be any increases in taxes and things like that, but don't underestimate the impact from physical damages. For example, during the winter month, we can expect to see an annual 20% increase in rainfall in the UK from 2030 onwards, and a 0.31 meters rise in sea levels every year from 2030. It is currently rising at about 0.08 meters every year. A big part of the UK is already flood sensitive, so imagine what this will look like in years to come. More rainfall and flooding may just sound inconvenient, but it does come with a huge price tag. At the latest fiscal risk report by the OBR, which gets published every 2 years, highlighting key fiscal or government's budget risk to a country, said tackling climate change is going to cost the UK taxpayer £344 billion over the next 30 years, or 0.4% of our GDP a year. However, what they have also said is that if we don't do anything right now or take any actions, the overall impact would be much worse, where we can see UK debt to GDP rising as high as 290% by the end of this century. And this is not just limited to the UK, it is also going to impact US, which represents 2/3 of the stock market. It is going to cost the US about $1.9 trillion or 1.8% of GDP just to pay for these physical damages if climate change is overlooked. And guess where this money is going to come from? Again, the taxpayer, so directly from our pockets. If not directly from our pockets, then at least it's going to come from the government, who will have to raise a lot of money, putting pressure on interest rates, increasing debt level, and the whole thing continues, and you get the picture. Anyway, having said all that, here are the actual numbers. In the UK equity market, we can expect to see performance impact of 18% if we take no action towards climate change, versus if there was no climate change. The best outcome comes from early action, which still shows a negative 2% return impact, and that's because, as I have mentioned, by transition cost, which increases cost for businesses. But it really is the best option out of all three. Finally, in the late action scenario, you can see that it can lead to a market crash around 2030. And that's when the bank expects a sudden policy change. Even though the negative impact will start to diminish over time, it will remain worse off than an early policy action. We can see something similar in the US stock market as well. Now, as a bonus, I have also looked at UK house prices. It follows a similar pattern, but see how with a late policy action, we can see price crashing to nearly 30% in around 2030. And again, early policy action is best. Now, if you're curious to know how I got these numbers, and nope, I have not made them up, the underlying data directly comes from the Bank of England website, and it is actually free for all of us to download and use. So I basically downloaded the raw numbers and did some calculations following the bank's instructions. By the way, before you take these numbers as face value, I do recommend that you read the disclaimer comment section by the bank. Although while studying climate change and its financial impact, I did find this very eye-opening. I never actually thought about this impact in great details before. But I would love to know your thoughts too, so do let me know in the comment section below. But that is all for today. Until next time, look after yourself and your money.